can go to Google right now and just Google the share price of Facebook. Okay, so I'm going to switch my screen and I'm going to go to my Safari site, if you can see. So I'll just go to Google here. I guess we can all see. Yeah?
Yes, we can.
Okay, share price. Okay, good. So can we see that? I use this illustration to explain to just someone recently. So Facebook share price, we're all there, yes? Good. So Facebook share price, what I'll do is I'll just tap on the 5-year chart. I'll tap on the 5-year chart so we can see that there, yeah? So just zoom out a bit so you can see. So Facebook now, let's just look at this share price of Facebook. Look at where they were in 2016, $105. $105. So between then, and let's just pick here, 99% profit. Yeah? That's from 2016 in 4 years. 110% profit. Okay? So that is just by keeping the money. So let's say Joe Block bought Facebook at $106 in 2016. You bought $2,000, £2,000 worth of it. What I'm saying to you is that in 4 years now, you've doubled your money. Okay? Now, any bank in 4 years would not give you double your income or double your savings. Zero. Okay? Now, let's decide that I was saying one time that speaking to my father-in-law, and I said to him that this stock, I wish I had done it earlier, started earlier. He said, son, whenever you wake up is your morning. Okay? So if you're waking up now, this is your morning. Okay? If today is your morning, this is it. So don't feel too bad yet. I'm still here to show you more. Okay? So let's see, there's a dip that happened here. Just if you just tap on it or your mouse, $124 in 2018. $124 in 2018. As we speak today, Facebook, I just go back down again. As we speak now, Facebook has gone up to, just release my screen, let's see here, 2018. Today, Facebook is up 58% already, as you can see. Now, COVID, which I speak about, that dip there, that dip is COVID, okay? That dip is COVID, 3rd of April. 3rd of April. 3rd of April, maybe roughly a month and a half ago. Guys, please, if I go back to 1 year, that's the dip, $149. $149 today, just 2 screens, look at that. 38% profit. So assuming you bought at the dip just on the 12th of March, that is 38% profit already. Okay, so that's just Facebook, one of it. Let's go again to, let's say Apple. Okay, so guys, go again 5 years, same trend. Okay, if I hold it down a bit, 2016, $93. Apple is $306, guys. 3 times. So let's assume you bought, okay, you bought Apple shares. Apple shares, you got them. 2016, you bought maybe say £5,000 worth of Apple. You bought 3,000. Even if you bought just $100, you bought 1. Today, you have $200 more. So as you can see, the trend rising now. Let's just hit 1 year. Let's look at COVID. As you can see, the trend all the way from, let's just say, go 5 years. See the trend from 2019. 2019, there was $148. I hope you're doing this same as well. Just cross-check with me so that you don't think my Google is not the real one, okay? So if you run through and you see all the way down to here, peaked $318. And go back again 1 year there. Just go there again, then you do the same. Okay, 28% profit today. So today is $306. And if you bought it just roughly about there, $222, $29. So you're already 38% in profit today. And that was on the 20th of March. 20th of March. Okay, so let's go again. I just like doing this so that you can see what I'm speaking about. Microsoft shares. And I guess most of us have been in the UK for quite a while. Some of us maybe just joined. Please, can we also see Please look at that again. $54 in 2016, and we're looking at $174. That is multiples 3. Okay, we go back again, the same thing, COVID. So my blogs, my sites, postings, apps, promptings, $135. And today it's back $177. So if you bought, even if it's one share of Microsoft, $177, which in pounds could be 140, 150 pounds per share. You're looking at it today, is already up by what percentage now? 22% profit. No, sorry, 35% profit. And climbing, because everybody's working from home now. Everybody's using Teams. You're having all the Microsoft apps, Excel is all working. And I just get this alert now from Dow, surging 200 points again today. Okay, so these are some of the Netflix, Google is the same. Amazon is an interesting one. Just check out Amazon. Amazon is one I would really love us to have a look at. Amazon. Amazon is very, very interesting. Look at that, guys. Guys, look at that. 2016. $587 for one stock. And it's 2,374. I'm even choking on that. So, so guys, I mean, okay, I had a couple. They come to, when I normally train people, I try to train a husband and a wife together most times, because I try to do that so there's a kind of balance in the family account, so that the husband doesn't go crazy and invest the whole money, and the wife doesn't go crazy either. So I always try to train both people together, and I hope you're watching your spouse. It's quite good to get that balance so you understand it. So what I'm showing you here now, I will show you all of this, and I'll also show you how to buy it. So that's what I'm getting to at the end of the day. So the couple came in the length. So the wife just went home and she bought £10,000 worth of Amazon stocks at £1,400. So today, if she didn't sell it, she's sitting on clean, just today alone, £1,400, £1,300 profit per stock. So now there is no, and she bought, and that training, that she came to the house, they came to the house in 2018 or 19, I think they were in the house a year ago, which is roughly around about, say, maybe just here, something about there. I think roughly here as well. They came in here, something like that. 2019, $1,337, guys. Now, some people may say it's a lot of money, it's too much, sometimes it's too expensive, but I'm just giving you an idea of what it is. So today it's $2,300, and we will still say it's expensive. When it was here, $825, $22, it was too expensive. Okay, when it's here, $607 is still too expensive. This is the excuse we give. But I'm not saying, don't get me wrong, please. I know that money sometimes is hard, and I know sometimes it's difficult to get. What I'm trying to say is, if you don't make an effort to invest what you have in a good and valuable company, everything is too expensive. Okay, just to note. So again, as an example, I bought Amazon shares myself personally, $825. I sold it at $1,020. And I regret doing that till today. I bought Microsoft shares at $53, and I regret selling it. So I sold it because I needed the money at the time, so I closed it. I closed it at the time to sell. I bought even at $88 as well, Microsoft today, and I'll probably be sitting on double the amount. Okay, so that's just to illuminate that, look, these things, guys, is there. It's happening. So when your bank is giving you 1% profit, to be honest, it's more like a rip-off, because 10% profit is a no-brainer. I know of someone even in this group who bought Amazon shares, AMD shares at $18. AMD, as we speak today, is almost $50 per stock. Okay, so I think I've driven home the points at some there, so you know exactly what I'm speaking about. Fine, I'm showing you shares that are doing well, but these are the FANGs. So they call them the FANG, which is F-A-A-N-G. You hear that sometimes on the news. You hear them speak about it a lot on CNBC, maybe some Bloomberg, some of the stock channels. You could hear them speak about it. So FANG is what they call them. So F-A-N-S. Netflix as well is the same. I know some of us in this group, when we do trade a stock, sometimes that made a lot of money from Netflix, from Roku when they initially came up in the market. So anyway, guys, but this is it. So this is what is actually going on right under your nose. Okay. So I like this saying from Benjamin Franklin. which is really what I want to focus on. It says, tell me and I forget, teach me and I may remember, involve me and I learn. Okay, so I'm trying to get you involved. Okay, so to get us involved now, I'll go straight to my website and I'll go straight to the blog. And I did ask that most people who got the flyer to read up on this, the stocks and investing and the basics. So you read up on it. I hope you did, because I'll go through that now again, so that just to cover some of the basics of stocks, and then we'll go into the platforms where you can buy them, and we'll take it from there. Okay, so I'll go to my website now, so which is www.shares investment. Yeah, you can see that shares investment ls, which is lifestyle.com. Okay, and here you go. So now, yes, so this is the site. So I would advise that when you go into the site, you log in. If you haven't registered, please do register the site, and also do subscribe here at the end. I also sometimes put up some Instagram sites as well, postings as well. And also some of my blogs as well. So today we're speaking on this blog, but if you click on the blog here, now it takes you straight to the blogs. So I've written on different topics: stocks, basics, COVID, I've written on the crash, history repeating itself. Very, very good articles in there. Also simple steps to enhancing your financial goals. Really good ones you should read as well. Tax on your ISA accounts as well. Really, really good read there as well. A lot of information there. A lot of information here as well. I'll just show you that as well. So I've got at the end, I'll come to it. I'll just show you something first for now. Here, when I speak about ISAs, which will cover at some point. Okay, so I'll go straight into the blog. I was going to talk about the shares. So here we go. Okay, the basics. Okay, so in investing in stocks, simple basics here is you really want to be clear on your motive and your goal. What do you really want to achieve if you buy the stocks? And what's your motive? Why do you want to get it? Why do you want to get into the business, into that business? And what do you want to do with it after you own the stocks? So you really need to think about that. Okay. And then secondly, of course, we have this stimulus of wanting to invest. And I guess probably that's why most of us are here already. So you want to get some financial independence, you want to be debt free. You're thinking about your children's college fees or university fees. You're also thinking about paying off your mortgage, being debt free. As I said, you're also wanting to try and optimize your savings. Again, remember that whatever you're saving has to beat inflation. Please think about that. Whatever you're saving, any cash you're saving in your bank account, if the interest you're making or the profit you're making is not beating the inflation of the country you're in, you're losing money, you're not actually gaining money. Okay, so if your inflation in any country you exist in or you're dwelling in is increasing, basically your money is dwindling. So you want to have your cash in something that would be, assuming the UK's inflation is about 1.82% or so. So whatever you're making has to be at least above 2% for you to say you're profitable in your savings. If not, your cash is just losing value. Okay. So for stock, now, like I said, they're only pieces of businesses. So the thing you really want to focus on now is to try and get a portfolio. Okay. So a portfolio, basically, just using the picture there to depict that, it's basically trying to gather a few companies, or if you want, many companies, up to you. But ideally, it's best if you're really wanting to invest in value, you really want to be sure that you are investing in the right company. So there are not a lot of right companies out there, or a lot of value companies, or a lot of companies that are making a lot of profit out there. Okay. And in this purchase or trying to build your portfolio, you want your portfolio to be balanced. This is the main thing. You want your portfolio to have a balanced portfolio. Now, in having a balanced portfolio, you could decide to go in different sectors, or you want to just focus on two sectors, or you want to focus on one sector, or just your preference. Like I said, everything depends on your motive and your goal. Okay, so I've already examples are the finance sectors, the tech sectors, the commodities, the food. Now, each of these are some research, and I usually use Investopedia quite a lot of info there. So, for instance, if I click on the finance, it gives you the top financial stocks in May 2020. Yeah, you can read up on them. Again, the financial sectors, what they mean, what it actually defines. JP Morgan, You can see all on Goldman Sachs. You can read up on all these stocks. You can see, and then you can also explore more info as well on these stocks. Remember, in everything I'm saying, you also have to do your own detailed research, read them or read up on them, understand these terminologies. And this is a great website to go to understand exactly what these terminologies do mean. Okay, commodities, food, health, transport. So you can click on any of the links there and it takes you to those sites. Okay. So you then decide on the sectors. After you've done that, remember that this also engulfs your decision. Part of your decision is your short-term and your long-term prospects as well, and your risk appetite. Some of these sectors, you can have, for instance, Uber as an example. If you invested in Uber, say you bought Uber stocks, and Uber is, of course, dealing with a lot of people, movements and traffic. Now, COVID hits the market. Of course, Uber will definitely crash or not do well. Let me not use the word crash. But that's why Uber is trying to diversify their business now and trying to buy a food delivery business as well and add that to their. So in terms of people being at home, you now have drivers who are delivering food to people. So again, that has bumped up the stock price a bit because it's trying to diversify and adjust to the times we're in right now. So as you can imagine, a lot of commuting, even Airbnb may also slip in price. Also, if you're looking at Lyft, same thing. Lyft is also another issue. You could have the same issue unless they diversify, as well. So these are some of the considerations. Your risk appetite, you really have to be able to do some fact finding about these companies. Okay. Then you also have the properties of the stock, which I kind of put them into this format. So you have value stocks, you have growth stocks, you have high dividend stocks. So imagine a portfolio where you have some really high value stocks. As an example, Microsoft. For me, my consideration is a high value stock. You have that stock in your portfolio. You know that whatever happens, these guys steady. Usually they call them defensive stocks. So they stay the way they are. They don't drop in price, irrespective of the economic situation at all. They have a lot of cash flow. For instance, Apple is about $1.2 trillion in market cap. So, and same as Microsoft, they're in their $1 trillion market cap level. So these guys have a lot of cash flow to weather almost any storm. Okay, so you want to have those kind of companies in your portfolio. Then the growth stocks are stocks that could double, triple in price. Maybe in the next 2-3 years or 1 year, it could jump so fast. Doesn't mean that the value stocks can't do that, pending their maybe the investments they've made and the acquisitions they've made. Doesn't mean they can't double, they can, but growth stocks are like, say, the Rukus or the Netflix. You can call Netflix a growth stock. Very soon, Netflix will become almost like a mature value stock. So you get my drift. Then you also have the high-end dividend yields. So these guys, for instance, they have the China Petroleum. Those guys, their dividend is like 6%. Okay, you have ExxonMobil who had a high dividend. Of course, with the oil price now, they're beginning to cut down on some of their dividend. There's lots of companies that offer really high dividend, but doesn't necessarily mean that they're going to grow. Okay, doesn't mean that they're really going to grow very high, but they try to use high dividend to draw you in to invest in their company because they pay this dividend. And dividend is quite good for what you have in terms of multiplying your profits. So, for instance, you had 5 shares, they pay dividend. Over maybe a year, you've now, from the dividend output, you've now invested, you bought 2 more shares just from the dividend alone, or from dividend alone, because based on the number of shares you have, you'll be able to invest more shares. Then they now pay dividend on the number of shares again you have. Okay? So that's dividend. So you want to have a mix of that. So again, I also like you to check cyclic stocks and defensive stocks. I spoke about defensive stocks. Cyclic stocks are stocks that you buy. They kind of go with the economy. So if the economy is booming, they boom. If the economy is down, they're down. So they go with the cycle as well. You can see more details on what they, more info on it. Mutual funds as well, very key. Mutual funds are where you have a conglomerate of companies. So basically, these companies are you could have Microsoft, you could have Microsoft, Apple. Maybe these dividends, maybe these mutual stocks focus on only tech companies. They focus on maybe only transport, or they focus on the mix, or they focus on in the country or region, in Asia, or they focus on the top, the top 50 oil and gas companies in Malaysia or in Asia or in India or anywhere. So they come in varying from mutual funds are massive. There are lots of them. Here, they've already pre-selected the stocks based on, again, the risk. If it's sometimes they're going to high risk markets, sometimes they're going to low risk market, being low risk stocks or high risk stocks. So then they form all these mutual funds, and then they come up with a price, and then they sell them to individuals. So people then buy these funds. Now, almost all companies, maybe 99% of companies are all into mutual funds. So all your pension funds are all into mutual funds. So the company would invest, maybe pick like 6 or 5 mutual funds, and then ask you to, so all your contributions every month from your pension would buy in these mutual funds. Okay, so you can also own a mutual fund. You can buy and own one yourself. Okay, so this is pretty much what mutual funds are. So like I said, they're based on sectors, risks, and really what your motives are as well. You could read up on lots of mutual funds and decide on which one you want to pick. But I will tell you to buy some stocks, but please remember, as a disclaimer, anything you do in terms of investing in stocks, whatever decision you make, is solely, completely your responsibility. Do your research, I could suggest, but it's up to you to decide if you want to, and the responsibility or the outcome of it is your call. Okay, so let's get to nitty-gritty now of it. So let's say points of focus. Okay, so the focus point now for me is, first, which stocks now do I buy? So you've heard of all these stocks, you hear they're doing well. I've just shown you some few stocks, like 5 or so that are doing well. There are also some that are not. So how do you know which one to buy? Start with. So as Warren Buffett would always advise, start with what you know, what you're used to. So I try to put some tips here on questions you should ask yourself to start. So the first thing is like, which household company or companies do you know and you're familiar with? Okay, so which companies are you familiar? What do you know? So let's start off with first examples. Starbucks. Everybody knows Starbucks is there. Starbucks has the share price and they're doing fabulously well. Microsoft, Apple, McDonald's. Also think about your financial institutions. Bank of America. You have your Lloyd's Bank. Even gaming. Xbox is owned by Microsoft. So they're there. Microsoft is there. Also think about the food. Coca-Cola, for instance. Big Beans is made by Heinz. Even the sweet Snickers, the chocolates. Think about, just know, when you Google it, you can find the name of the company that's manufacturing this thing. So even think about these household names. Why I say household names? Because when you think about household names, that's what people do and use all the time. People use it, people visit it, or people eat it. That's irregular. And once it's irregular, it's profit. Once it's irregular, it's stable. So if you think about that as well, okay? Also, your phone, your mobile phone, for instance, we think about Apple, that's good, but also think about the parts, okay, the processors, the various parts, the supply chain that, supply all this. If you get the supply chain for Apple, you'll be able to know exactly which products, which companies make them and their profit margins, and you can study and read about the companies, and you can also invest in them. Also remember that if you invest in these companies, if Apple is now deciding to take them off their list, it means that their share price will drop. If there's a competitor in Apple, then it means to affect their price as well. So you also have to factor all that in. Okay. So once you do all that, then you now go into which category they fall into, which we talked about, the sectors. Then you also have the fundamentals. And the fundamentals kind of give you, this is a beautiful thing you need to know, the fundamentals. Now, it's not fancy, it's simple. It's basically the cash flow, the revenues that they generate, their user base. You want to find out about the balance sheets, how much money they make per year and everything. Now, you'll be wondering, how do I get all this information? You're asking me, this is like over the top here. It's not. And like I said, everything I'm telling you, I learned it on my own by just studying and by reading and by just checking it out. I've not attended any training yet. Of course, at some point I'll go for formal training, but everything I'm explaining and teaching you, and I've made money from it as well, I learned by myself. And it's not magic. If I told you I bought Amazon at $825 and I sold it at $1,000, that's nearly 15% profit. Okay, so if you click on the fundamentals as well, it takes you to Investopedia, which is really good. Please read up on them. What are stock fundamentals? You can see everything I was speaking about here. Very, very clear. Gives you definition. And very good are these videos. These videos are the best videos you can ever get on Investopedia. They're very short clips, and you can just get it in less than a minute or so, 2 minutes. You understand exactly what it's speaking about, okay? And research, just read up on that, okay? So where's my website? Okay, so links you can go to. Investopedia is there as well. One of them I just showed you. So websites you can go to check for these infos. Investing.com. You can look at investing.com. So I'll do an example now. So let's just say we go to investing.com. So I go to say Apple. You just put in Apple. Yeah, it's an example. You hit Apple. Okay. So here it will give you an idea of the price. They have some news. Here you can see you have like your general, you have chart, you have analysis. This is one of my, and again, this is one of my friends on this group, probably in the group here, who actually introduced me to investing.com and sharing it today. You can see their financials as well. You can see the financials. You can see their income statement, balance sheet, cash flow ratio, dividends. It's not rocket science. Yeah, guys, it's not rocket science at all. If you click on it there, it will take you to their balance sheets. You can see their current assets. You can see their total assets. You can see their liabilities. So what this means are very simple things. I have basically read up on them myself. So again, for every company, you want to know their assets and you want to know their liabilities. Okay. So the total assets, of course, as an asset is value, is what you have. Liability is what you spend. So if you subtract the two, you get what you call the book value. So that tells you, or you can call it the net, or their equity. Yeah. And then when you have that, that can now tell you straight away the book value of the company, which you use, to understand the share price. How do you know exactly the share price of this company, the real share price of this company, not the price it's been sold at, for instance. So you can work out the book value, and you can work out the book value per share, okay? Which is very, very simple to do. It's nothing complex at all. Very, very simple, trust me. IG is a very good one. I will go into IG as well and explain that to you. Also, you have Google Finance, Hargreaves and Lansdowne, NYS, New York Stock Exchange. You can go in there and you can put any stock and you can find it there. Then also, like I asked, the ultimate question here is your short-term and your long-term goal. Very clear and obvious on that one. And again, brokers normally charge a fee. Sometimes they charge, like sometimes my broker IG will charge you like £8, even if you buy 1,000 shares or 4,000 shares of a company, and when you sell, they charge you £8. So guys, it's not expensive to buy at all. And then here we say make your purchase. Okay, so I'll just try to rush through because I'm watching the time as well. So here you have this important quote from Robert Kiyosaki. The guy wrote Rich Dad Poor Dad, and he said something very profound there. It says, it's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. Okay, food for thought. Really think about it. It's on my blog, so if you want to reflect more on it, you can go back and check it. So I've recommended a few online brokers